வணக்கம். கோர்ஸ் கான்செப்ட்ஸ். Cost accounting. Cost accounting is a process of recording, analyzing, and reporting all of a company's cost, both variable and fixed, related to the production of a product so that company's management can make better financial decisions, introduce efficiency, and budget accurately. The objective of cost accounting is to improve the net profit margins, how much profit each money value of sales generates. According to ICMA London, cost accounting is the technique and process of ascertainment of cost. It concludes the ascertainment of the cost of the every order, job, contract, service, or unit as may be appropriated. It deals with the cost of production, selling, and distribution. Absorption costing. Absorption costing, also called full costing. It is a managerial accounting method for capturing all costs associated with manufacturing a particular product. The direct and indirect costs, such as direct material, direct labor, rent, and insurance, are accounted for by using this method. The costs observed under the absorption costing include variable cost, fixed cost, and semi-variable cost. Variable cost increase or decrease in the proportion of the goods produced. Fixed costs do not alter irrespective of the quantity of production. Semi-variable cost increase or decrease in batches. This absorption costing covers GAAP standards. GAAP refers generally accepted accounting principles. Marginal costing and marginal cost. Marginal costing is a technique or system of presentation where the total costs are divided into fixed and variable. It is a presentation of sales and cost data with a view to guide the managers for taking short-term decisions like sales mix selection, make or buy, acceptance of special order, etc. It is also used by the managers for cost control, budgeting, and profit planning. It is highly applicable to industries producing more number of products. Marginal cost. It refers to the increase or decrease in the cost of producing one or more unit or serving one more customer. It is also known as incremental cost. Now we will see what is job costing. Job costing is defined as a method of recording the cost of a manufacturing job rather than process. In job costing system, a project manager or accountant can keep track of the cost of each job by maintaining data which is often more relevant to the operations of the business. The job costing is a specific accounting methodology used to track the expenses of creating a unique product. As certain projects such as construction require different operations, accountants use this methodology to trace the expenses of each job. In order to use this information for analysis and tax needs. Job costing forms have spaces to include direct labor, direct material, and overhead. It is applicable to printing press, automobile garage, repair workshops, shipbuilding, etc. Batch costing. Batch costing is another form of job costing. In this method, homogeneous products are taken as cost unit. A specific number of similar products constitute a batch. It is the cluster of costs incurred when a group of products or services are produced. The total batch cost is aggregated and divided by the number of units produced to arrive at a unit cost. It is generally used by biscuit manufacture, toy making, spare parts manufacture, canned products, ready-made garments, spare parts of complex products like motor, cars, scooters, radios, watches, etc. Now we will see joint product and byproduct costing. A joint cost is a cost that benefits more than one product, while a byproduct is a product that is minor result of a production process and which has minor sales. The products which are simultaneously produced using the same input in a common process and each product carries considerably high sale value. Also, none of the joint products can be recognized as a major product. The raw material is processed in order to produce more than two products. A separation point called split off point segregates the identity of the joint products from where they are either processed further or sold as they are. Any product that is the incidental result of the process of production is called a byproduct. A byproduct has a lower net realizable value as compared to the sale value of main product since its occurrence is not priority but a consequence of the production process. This method of costing is used by petroleum, oil refinery, textiles, dairy, food processing, and many other process industries. Process costing. Process costing is a method of costing used mainly in a manufacturing where units are continuously mass produced through one or more processes. Examples of this include the manufacture of erasers, chemicals, or processed food. To determine a cost per unit in a process costing system, the specific manufacturing process and associated expenses must first be identified and total expenses per process for a period must be divided by the number of units produced during that period. Process costing is widely used in industries such as oil refining, food production, chemical processing, textiles, glass, cement, and paint manufacture. Now we will see what is the meaning of contract costing. It is also known as terminal costing. Contract costing is a special type of job costing where the unit of cost is a single contract. The contract itself is a cost center and is executed under the customer specifications. Contract costing is a variant of job costing system applicable. particularly in case of the organizations doing construction work. Each contract, short term or long term, is treated as a job. This method of costing is applied in a business where separate contracts of a non repetitive nature are undertaken. Contract costing is widely used in the construction industry and civil engineering. ABC costing. ABC costing refers activity based costing. ABC costing is a system which is used to find production cost. It breaks down overhead costs between production related activities. The ABC system assigns cost to each activity that goes into production. Manufacturing businesses with high overhead costs use activity based costing to get a clear picture of where money is going. The ABC gives specific production cost breakdowns which will help to find products which are actually profitable. Activity based costing is mostly used in the manufacturing industry since it enhances the reliability of cost data, hence producing nearly true cost and better classifying the cost incurred by the company during its production process. ABC provides an alternative to traditional costing. Traditional costing applies an average overhead rate to direct production cost based on a cost driver, example hours or volume. But some production related activities use more overhead expenses than others. As a result, traditional costing can give an inaccurate cost of making each product. Traditional costing is simpler but less specific than activity based costing for reporting externally, example investors, and activity based costing for reporting internally, example to managers. Cost driver. A cost driver is also known as an activity driver. A cost driver triggers a change in the cost of an activity. The concept is most commonly used to assign overhead cost to the number of produced units. It can also be used in activity based costing analysis to determine the causes of overhead, which can be used to minimize overhead cost. A large number of cost drivers may be used within an activity based costing system. If a business is only concerned with following the minimum accounting requirements to allocate overhead on produced goods, then just a single cost driver should be used. Examples of cost drivers are direct labor hours worked, the number of customer contacts made, the number of engineering change orders issued, the number of machine hours used, the number of product returns from customers. Cost pool. A cost pool is a kind of cost strategy to identify the cost incurred by the individual department or service sectors of the business entity. It helps in finding out the total of expenses incurred in manufacturing goods and in allocating the same to the different departments or service sectors based on some reasonable identifier known as a cost driver. Cost pool in activity based costing is to estimate the cost which is incurred in performing certain tasks in a business. By doing so, it assists in the allocation of the expenses to the various departments accurately according to the cost drivers. Cost drivers are the allocation criterion used to allocate the cost between different departments and sectors, such as the number of units produced, the number of electricity units consumed, the number of labor hours consumed, etc.